A top story, the turmoil in markets. The Dow closed more than 1,000 points down. It was lower at the start and stayed there, arguably just off its lows. The CNN Fear and Greed Index swung into extreme fear. And so now what's next? Peter Tuchman, oh, it is good to see you. Broker Quattro Securities with me from the New York Stock Exchange, my dear friend. All right, we know the reasons why. We know what happened. Should we be worried?
So look, I heard what you said before with the gentleman who was speaking, and I'm in a little disagreement. Yeah, I don't see, and he said at the end, look, that economically, think about 10 days ago, and markets were trading at record highs across all indices, and we felt like we were never going to have another down day. Yes, there was some economic data that was coming out that was pointing towards some problematic results. But, we were trading at record highs across all indices. So the question is, what in fact did happen? And is there anything completely fundamentally different than it was 7 days ago? Okay, so let's think about it for a minute. Maybe 10 days ago, we had a CPI number that was disappointing. We started to see that the NASDAQ got hit, the high flyers in the Magnificent Seven, right? They started taking profits there and rotating into gold and the Russell. That was legitimate. That was fine. That felt okay. But we've been pushing down, kicking the ball down the road on this interest rate cut, and I think we probably kicked it one road down a little further than they should have. I appreciate what the gentleman said, because I think if Jay Powell could turn back time, I think he would probably review Wednesday and say that was a missed opportunity. But let me just say one thing, Richard.
Go ahead. Go ahead, Peter.
No, I just wanted to say, I think what we ended up having was a perfect storm. We had the economic numbers come out. We had a mixed message out of the Fed on Wednesday. Poor economic data on Friday. We had sort of doomsday over the weekend around the war with Iran and Israel, and then a Tokyo Stock Exchange, which had a sell-off that was the worst since 1987. We come in on a Monday, and all of this was a perfect storm.
So if we look at previous market sell-offs, and some of the the ones we've known and loved, housing crisis, dot-com bust, pandemics, there's nothing that you see here that suggests more than a cyclical, or if you will, the Fed perhaps a bit late, but actually should not turn into a self-fulfilling downward spiral.
I think this is a situational story. I think the AI revolution is still intact. And as I said, not that much has fundamentally changed. I think the Federal Reserve probably waited a little too long, because look, markets can handle virtually anything, Richard, except given expectations that are not being fulfilled. And that expectation of an interest rate cut has been dangled for a couple of months now. And the economic data has pointed week after week, CPE, CPI, PPI, all of these numbers that have been disappointing over the last 6 weeks should have given them a red flag this week to know that this may have probably been the date. Now, did we miss the opportunity on Wednesday? Perhaps. We will never know that. But the problem is we may end up now having to play catch up, because if we had pulled a 25 basis point cut on Wednesday, look, the economic numbers that came out Friday still would have come out on Friday, and they would have still been disappointing, right? So I think there's more to it. The perfect storm around Tokyo and around the war in the Middle East, and all of these things coming together over a summer weekend really made the VIX spike, because this was not a panic story. This was a fear story.
All right, Peter, I'm grateful. Thank you, sir. Suddenly the world looks a lot better with you at the helm.
Let's stay positive. Yeah, it's always a pleasure to hear you.